Let's talk about commodities now, where we have seen some decline, some consolidation happen across board there. Remember, there are those geopolitical concerns coming in from the Eurozone, and that really seems to be impacting the prices. There also has been a decline in Euro, and quite sharp, 200 points from the kind of highs that we have seen in the previous week. And it's, of course, the ECB meeting on Thursday that the markets really are watching out for at this point in time, from further cues coming in for that space. But let's get in then. Rajni Panikkar, she's head of commodity research, Phillip Commodities India, and she joins us on the show. Rajni, hi, welcome. Before we get into commodities, how are you looking at the euro levels?
Well, in terms of the euro hitting the new multi-year highs, it has, of course, coincided with the fact that the bond yields of many of the troubled countries have seen a decline. We are seeing signs that the European banks may have turned around the corner, and also we have seen an improvement in the business sentiment that has come out of Europe lately. So those highs were not speculative in nature. They had their basis to which it can be linked to. But having said that, the political concerns that has now come in is weighing down upon euro. I mean, overall, we think that given the way there is a risk on sentiment currently in the market, backed up by improving economic data, we don't foresee a lot of weakness into euro currently. Of course, until something hits us out of the blue again in terms of which will look very drastic for growth going forward.
All right, on your screens is the France and the Italy data coming in just now from the Eurozone, and that also is coming on the weaker side. But Rajni, how would you look at the gold prices now? Because we've seen a very stringent range between 1660, 1680 to be on the best side. How are you looking at the prices in the global markets, and what's the rupee really doing into the range here?
That's right, Manisha. What we have seen is gold just not reacting to the fact that the three largest central banks of the world, the ECB, the Fed, as well as Bank of Japan, doing what can be considered as a competitive monetary easing policy or a debasement of currencies, which has actually traditionally been gold's best friend, and it has rallied on debasement of currencies, therefore diversification into gold, which is not happening. I was just looking at the central bank purchases of gold over the second half of 2012 and comparing it with a year ago level. Central bank purchases actually has come down by about 9%. And if you take away Turkey, which has actually done certain modifications to the way reserve is calculated, then actually central bank reserve increase in gold could be as down as high as 30% or so. So the fact that debasement of currencies is not helping gold, it is still down 4% year on year. It continues to maintain a tight range. It just shows that it is facing a lot of headwinds in terms of any upside resistance. If we take all that and put it into charts, then it is looking that it is finding resistance around the 1695. Potential on the charts is looking that there could be an upside break from this range of about 1650 to 1695, could target about 1755 or so, but beyond that, we might just not see the buying required for gold to push higher, and in a long term, that keeps gold still in a weak momentum kind of a zone. When it comes to India, the rupee strength, of course, weighs again on gold. We are looking at possible targets of about 29,500, 29,700 for gold to test to, given the fact of rupee strength.
Sure. Rajni, while gold is just one of the precious metals, there have been better gains coming in from silver and even better from platinum as well. If you look at the precious metal sector, where would you want to really put your money in between the three of this?
I think we would look into silver. That is where we can see some amount of potential, because the fact that silver continues to trade about the 29.20, 29.50 levels puts it into a stronger momentum trend compared to gold, and the palladium is something that I don't track. So between gold and silver, on a momentum basis at least, I would want to put my money on silver.
All right, to energy sector then, the crude prices have been gaining for 8 straight weeks, and this week perhaps is looking at some consolidation, but there is a very strong school of thought targeting $100 per barrel on the higher side for NYMEX. Are you in that group as well?
I am both on the on that group for two reasons. One, on the technical chart, there is a resistance that is coming in, which should find it difficult for crude to cross the $100-$150 level, and therefore looking to target levels of around closer to 92. Apart from that, on the fundamental side, we are hearing news about operational difficulties for the Seaway pipeline at Texas, which means that there could be supply glut for the WTI crude traded on NYMEX, and therefore a combination of a supply glut for crude as well as the technical resistance makes us believe that $100 could be a resistance, a strong resistance for crude.
Brings us to the base metal sector then, Rajni, and what's your sense coming in here, especially the kind of data that has emerged out of the Eurozone and US in the recent few sessions, and also ahead of the Chinese Lunar New Year holidays, which starts from 11th of Feb. How would you want to look at this very short period before that?
Right. Given the fact that the manufacturing data out of China remains supportive, there has been a mixed trend that has come out from there in January between the HSBC PMI as well as the official China PMI. But having put all the facts in terms of the business confidence for Eurozone, the factory orders data that came out of US yesterday, which was showing some improvement, but of course not disregarding the fact that unemployment remains a large problem out of US. The Q4 data out of US was a shocker. Given all that facts, if we bring it down to how copper maybe is looking for a medium-term kind of a trading strategy, then considering that copper has broken out of a range trade to the upside, we would still look at some amount of potential upside in copper. We are on the MCX, the Feb contract, looking for a trend towards 455, given that it has breached a 434, 441 level, a range to the upside. Therefore, we are considering a possible test of copper to about 455, and if that is breached, then about 465 levels.
Rajni, how would you look at the sector as a whole? Because we've seen zinc and lead perform quite well. Tin, of course, has been an outperformer there. Aluminum and nickel have been a couple of metals which actually haven't performed so well in this year till time. How are you looking at the sector as a whole? And going forward, what kind of bets would you want to put in the base metal prices as a whole?
Of course, zinc is closer to its one-year high, so is nickel. I believe that the entire sector has got this support drawing from the data that is showing improvement in areas such as the Eurozone as well as China. There is, of course, news coming out of China that they might look very closely and very stringently into monitoring their collateral financing through base metals. We've all read, and it's well documented, that China does a whole lot of collateral financing by importing copper, for example, tying them up into warehouses and taking loans on that, which is easy money. But there are a lot of news that this kind of collateral financing is maybe done where the same collateral is pledged a number of times, which I believe the government now is going to look very closely into. My take is that if there is a clampdown on such kind of, say, a collateral which is financed, which is pledged innumerable times, the same collateral that is pledged innumerable times, if there's a clampdown on that, then perhaps the imports out of China could increase, even for this kind of an activity which is not directly linked to manufacturing, and could see an increase in import. Which of course is a long shot, but since we were discussing the longer term trend, so that is one factor that I would monitor. But having said all that, in terms of base metals, I still think that given the fact that copper is heading into a supply deficit scenario this year of the sector, I'm closely monitoring copper.
Bharat Kumar, director at GFM, who joins us on the show. Hi Bharat, thanks for joining us on ET Now. As always, let's kick off with a trading call on gold for the day.
I think in case of precious metals, especially gold, in case of international gold, the trend is typically sideways, where it's range bound between $1680 on the higher side and $1660 on the lower side. Unless it breaks out beyond either ranges, I don't think the trend may set in. In case of M6 also, I think the April gold is taking decent support at around 30,450 to 30,600 ranges. So to that extent, I think one should be on the buy side. Ideal buying price would be to an extent of around 30,620 ranges. On the higher side, we are expecting 30,900 ranges. As such, the trend is range bound between 30,440 and 30,910. But for the day, I think the prices may go up to an extent of around 30,900 ranges.
Right, and what about your views on crude?
Yeah, in case of energies, especially crude, we have seen sell-off during yesterday's late New York session due to chiefly weakened because of the dollar appreciating again from 79 ranges. So to that extent, in case of crude, one should be on the sell side, maybe on the higher side. If it goes to an extent of 51.70 ranges, one should initiate short positions with sit stops beyond 52.04 ranges. On the lower side, we are expecting around 5040 ranges in a couple of trades. So in case of crude, one should be on the sell side.